It's a big, noisy universe of stocks out there. Welcome to Goodbye or Goodbye. Our goal to help cut through that noise to navigate the best moves for your portfolio. Of course, the tech space has been inundated with companies looking to tap into generative AI. But what's the best way to play this ever-growing AI arena? I'm here with Dave Mazza, Roundhill Investments Chief Strategy Officer. Dave, thanks for being here.
Thanks for having me.
So let's get to your buy stock, and it is Baidu. Interesting here. Don't hear too many folks talking about Chinese AI plays right now, but let's get into it and why you like it. First of all, you say it's got a diversified business model.
Indeed. So Baidu, known as the Google of China, and by that it means obviously a core part is their search business, but they're involved with a little bit of everything, including autonomous vehicles and generative AI. Of course, the background, as we saw with that chart, has been pretty challenging. If we were to look at a longer term chart, wouldn't be much prettier either.
Yeah, but that's actually, you say, part of the thing that makes it a good play right now because it's come down so much.
Yeah, exactly. So the macro concerns have really weighed on the stock, right? Most people have not ignored any of the positive fundamentals and focused just on the fact that it's China related, and China names have been out of favor for geopolitical reasons, macroeconomic concerns, what have you. But bottom line, it's now trading at some of its lowest levels ever since it listed. And that translates to a 10x forward times priced earnings. Where can you find a tech stock as diversified as Baidu is at 10 times forward earnings? Pretty hard to find, especially in the US.
Yeah, it's true. But let's talk about the Gen AI part of it specifically. So what is Baidu doing on that front, and how is it going to help boost profitability for the company?
Yeah, of course. So a lot of companies are talking about generative AI, but less are actually doing it. Baidu is an example where they are plowing money into generative AI. That's loss-making right now, but what they have is called Ernie bot.
Yeah.
So we're focused on ChatGPT. That's basically trained on English language, large language model. Ernie bot is Chinese, using the Chinese language, and so what that means is that the results are actually more accurate there. So that's just one example of what the company's involved in, but generative AI is a big part of its push forward, and you can imagine them integrating that into search and into other applications like a Microsoft is today.
We have to talk about the risk whenever we talk about a buy stock. And here the risk is pretty obvious because we've already seen it, as you said, affect the stock. And that is its focus on China and the sort of macro headwinds and unpredictability of that.
I think that's a big part of it. And the reason why investors have re-rated these stocks down is because of it's really hard to quantify what's going to happen in China. And there's been so much concern. But again, if you look at the valuations at 10 times forward, the revenue growth remains there. To me, this is really thinking about, unless you believe that something catastrophic is going to happen in China, if you're looking for attractive tech valuations, a name like this might fit the bill.
So in other words, effectively, it's priced in some of the China risk already and perhaps overpriced in that China
That's what we believe. We think at this point, the shared decline has been too extended. And again, for investors looking for an opportunity, a name like Baidu could be there, and you have some of that margin of safety at this point with 10 times forward earnings.
All right, let's get to the stock you're avoiding here. And this has been a popular one, which you say maybe is part of the problem. ARM Holdings is what we're talking about here. The stock has really skyrocketed, especially this year. But here, you know, part of the company's sort of selling point when it did go public was this Gen AI opportunity. But you think it's overstated?
Yeah, exactly. I think it's hard to say goodbye to a stock with a chart looking like that.
Yeah.
But to your point, that's part of the story. Really, since their IPO, their reintroduction as a public company, they've just soared. But our concern is when we think about, again, generative AI, is it going to happen for them now? We know they're involved with NVIDIA. That's known in the price. What other deals are they going to sign on? A bigger concern to us is their involvement with Apple and Apple smartphones and MacBooks, what have you, because they are licensing and the royalties from the chips there are a big part of ARM's business. And the question is, does that really start translating anytime soon? We actually think some of the Apple concerns could bleed into that and overwhelm anything positive from Gen AI.
Interesting. Okay, let's get to the second point here. Competition in chip design. In some cases, you know, from the hyperscalers themselves, in some cases, other chip companies.
Yeah, that's exactly right. So we're seeing companies begin to design their own chips, actually kind of leverage some of the learnings that maybe they've had with ARM, or just simply the fact that everyone's getting into it. There's tons of catch-up happening with NVIDIA, and whether it's AMD, at some point Intel will figure it out, and others, is that the chip space, the cyclicality there is still something that investors cannot ignore, and ARM, I think, is a little bit more subjective to the competition than other players may be.
And then finally here, other significant risks that we're looking at to the business?
Yeah, I think there's just other risks with ARMs that we may not be aware of, particularly on that valuation side, right? If they are trading at 100 times forward earnings. And so even if this company has an excellent business model, you have to understand what you're getting here. And 100 times forward earnings, let alone the insane price that they're trading at on a revenue basis, I think there's just a lot of risk there stepping into the name now.
Yeah, I guess the phrase price to perfection was invented for a situation like this. So let's talk about the risk to the downside here. It's that the stock could correct, right? And maybe then it would be a better entrance.
Here's the interesting thing. When we think about opportunities in generative AI, there's going to be a lot of names that are going to be exciting. This name to us has those elements, just not at 100 times forward earnings. And so interesting enough, a risk to the case is, does actually SoftBank, which remains a large owner of this, not actually sell? And then at some point, investors who have been on the sidelines or the short sellers, which were absolutely burned in the last earnings, have to give up and say that this becomes a buy. But for the time being, we're waiting for a pullback before adding.
Gotcha. Okay. And just quickly, disclosures on this. Baidu, I believe you guys hold this in some of your portfolios.
That's correct. Yeah, it's one of our largest holdings in our chat ETF, which is the Roundhill Generative AI and Technology ETF. So want to make sure folks are aware of that.
Yeah, and ARM, no position in ARM.
No position in ARM.
Okay, Dave, let's summarize the case you're making to investors here. You say people should look at buying Baidu based on that diversified business model, attractive valuation efforts, and expanding generative AI with Ernie bot. On the other side, you're saying avoid ARM. It's facing rising competition, and its true involvement in generative AI right now, at least, has been overstated, along with that soaring stock price. Thank you so much, Dave, for being here. Appreciate it.
Thanks for having me.
And thank you for watching Goodbye or Goodbye. We'll be bringing you new episodes 3 times a week at 3:30 p.m. Eastern.